Hey guys, how's it going and thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't. Don't forget to subscribe and follow me on Instagram for some bonus content. So let's get started. So in this video guys, I want to go over the differences between real estate and stocks and kind of look at the pros and cons for both, because of course there are pros and cons of both. Because I was starting to look into real estate like for investing purposes, so I was starting to go through the numbers, and then I questioned why, like, is that the only option or should I just continue in stocks? So let's look into it. Now before going any further, I would honestly recommend only use money you're willing to invest. Once you have like a cushion set up somewhere, you know, for however months worth of expenses, but once you have that set up, then you could start investing in stocks, real estate, what have you. Okay, so we're going to start with real estate, and given this, like what's going on right now, this generation, right now I'm 25, so completely different landscape from when like previous generations were getting into real estate, because one, it was definitely cheaper, and the salaries over the years really hasn't kept up with inflation of housing prices. I actually just had a video on why school lied to you and how life has changed. I'll leave a link in the description so you could check that video out. It is a longer one, but I'm very passionate about that stuff. But it goes over real estate and how it has completely changed over the years. So, you know, when our grandparents bought a house when they were 21, completely different from if you're a 21-year-old now, because housing prices have like double, triple, quadrupled since back then. I'm not going to be focusing on flipping houses. I think that's more of a risky situation. It could still work, don't get me wrong. Of course, people do it. But personally, if I were to invest in real estate, I would go the more passive route, passive income with rental properties. So you buy a place, find a tenant, you get the rent every single month, and that's great. You know, you don't have to do anything, and you just get money every month for just having the property. Unfortunately, that's usually a huge startup cost. I'm no professional with real estate at all. There might be ways to invest into contracts, flip those, and get money for that, but I'm just saying putting like a certain percentage down to get a mortgage, leverage it so you get that rent. Now that's obviously a huge pro. You know, you have that rental income. If you have a great tenant, you know, they have that lease set up and everything, you're golden. You collect those rent checks every single month and it's looking really good. However, we have to realize that it is a very long-term process. It's a long-term investment. If that money basically is gone, like you really can't touch it for too long. I mean, you could try to sell it. If that renter is in there, you might be able to sell it. But selling it is definitely not like an overnight thing, so you have to think about that as well. Now, I'm in New York, and these prices are higher than the average. So I'm just going to look at, there are probably houses more expensive. There's probably a lot more houses less expensive. But let's look at like a $250,000 property. If you put, I would want to put 20% down because that avoids PMI insurance. If you put that down, you don't have to pay that. So I would definitely go for that. So on a $250,000 property, you would need $50,000. So you would have to pay for taxes. You would have to pay for the mortgage, the insurance, and all these things. And then you would have to make sure that the rent you're charging the tenant is more than your actual mortgage payment. So that way you could have that positive cash flow to make money every single month. Could be a couple $100, up to several $100. But if you're leveraging it with the mortgage, it might not be a huge amount. Now, of course, if you have a great deal, maybe if you have a larger down payment, you can make more money in the beginning. Now I thought about this, and let's say like you get, I don't know, 5 to 6% return on a rent. It might be more, it might be less, but let's just say you get 5 to 6%. We first have to realize that that's not your return on your investment. yeah, you are getting 5%, 5 to 6% on that rent on your initial down payment. However, you have that mortgage that you originally wouldn't have if you didn't invest in real estate at all. So I know mortgage rate, interest rates could be around 4.5%. So yeah, you might be getting that 5 to 6% on your rent, but you're paying that 4% on your mortgage, which is more like a $200,000 mortgage. 4% on that is significant. And yes, in addition to that, there's also appreciation of the actual house. So I just looked up the average from, what was it, 1968 to 2009. The average price return was, or appreciation was 5.4%. That was like right after the crash, so let's just round it up to like 6%, maybe even 7%. So that's a good return if you factor in the rent return, your capital appreciation return, kind of minus the interest that you have on that mortgage. But of course, those returns are going to be much larger if you don't have that mortgage. If you have all cash, unfortunately, you need the cash. You know, that's a huge capital investment that a lot of people don't have. And of course, there could be vacancy rate. You might not rent it out for a month or two, so you have to recalculate that as well. So those are kind of some of the quick pros and cons of real estate. So now let's go into stocks, starting off with one. Obviously, you don't need a huge amount to start, especially with the newer apps out there, the investing apps like Robinhood. You don't need a huge amount. You could start with $1,000. You could start with $100. You know, you don't need 50 grand like in real estate. You could definitely invest smaller. It is also more liquid. If you need cash right away, you could sell the stock literally in a second. Not counting penny stocks. But if you need the cash, unfortunately, if you do need that cash, you could sell out at the wrong time, because if it's like a long-term investment and you have to sell it right now, it could be the wrong time. But it is definitely a possibility if you need that right now. Now, the returns of the stock market, history shows that it's an annual average between 7 to 10%. Unguaranteed. Real estate is kind of unguaranteed as well. Every investment basically is. But that's something to keep in mind, 7 to 10. Now, with real estate, you would need like a realtor for them to show you around and everything, or you could use like Zillow and actually look around, see what's out there. But stocks, I guess it's a little bit more easier. Like, you still have to do research into the company, into the stock and the price and all that stuff. But to actually go through and buy the investment, buying real estate is definitely more complicated. Buying a stock, you just click like a button or two. So looking at the growth rates between both investments, might be very similar. If you do at the market, maybe a little bit above the market, you could potentially grow faster with stocks, especially if you're in like smaller cap companies. You could easily go up faster than the normal or average 10%. Now, the other thing with stocks, what you can't do in real estate, once you put that money in real estate, it kind of just sits there and you don't put anything more into it, unless you like renovate the property or something like that. But with stocks, you could have like a monthly reinvestment plan. This could be either for retirement, could be, you know, in mutual funds or whatever. But you could have a monthly installment plan, so you continuously invest over the long term. And some stocks have that kind of passive income with those dividends. Now, two real quick pros to both investments is they both kind of have some type of tax benefit. Real estate, you can manipulate some things. If you have like a business, you can write it off on some things. With stocks, I know dividends, their tax rate is definitely lower. I think the max might be 15%. The lower end could be 10%. Capital appreciation of a stock, if you hold it longer than a year, there's a max to that. But if you're trade within that year, it's still going to get taxed at your normal tax rate. And second pro is that both of these investments are better than a savings account. if you put money anywhere else than a savings account, you can potentially easily outperform a savings account. So of course, every person has a different situation, their capital that they have, maybe even the location that they're in. Certain real estate might be better or worse in certain areas, where stocks you could buy anywhere you are. So of course, it depends who you are. For me personally, I think it would be a better idea to start with stocks. Now I'm saying this because there's simply a lesser capital to start with, which most of us are in that situation. You could potentially grow it faster, so that's a great thing. And especially with real estate, the larger capital that you have, the better the investment, or like definitely the cash flow. So initially you could invest in stocks, and then you could either, once you have enough, invest that in real estate so you have no mortgage, and so that passive income is even better. So if you set yourself up with an individual retirement account, an IRA, could be 401k, Roth IRA, mutual funds, stocks, whatever you want to set it up as. And then as you grow that amount, you could start investing into real estate, which is kind of the route that I believe, as of right now at least, where I'm going. I would rather, because that's a huge amount of capital to get locked up for the long term. Now you could make money off it, and people love passive income, but if it's like a couple $100 extra every month, yeah, that's great and all, but if you could make more in stocks, especially for less money, I would want to do that. So I'm looking away from real estate, at least for right now. I'm going to focus more on stocks, at least, to grow that money for the long term. So let me know what you guys think. Some pros and cons that I didn't go over. If you like real estate better, if you like stocks better. And don't get me wrong, I'm not saying like stocks are better all around. It really depends the type of person you are. If you could not care about stocks at all and go all real estate, and that's better for you. So if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. Main reason for me, I like to look at my cash flow. I always talk about cash flow, and if I'm going to have a huge mortgage, if you rent it out, it's going to cover that mortgage, but that extra rental income, you might get like a couple $100, where in the stock market you could get that or more. So don't forget to subscribe, guys. You can fight me on this or not. Definitely worth looking into of what we would rather go into. So thank you so much for watching, of course, and I'll see you in the next one.